You notice my background is all different. Today I'm at Minneapolis, Minnesota branch in Bloomington, and this is my office here. So, everything is different. I will be today. What I will cover is really a good summary of payroll tax relief come out of the DOL, Department of Labor, and it come out of SBA and Treasury, and it is about payroll tax credits and the deferrals. And I know these can be confusing terms, but after this one, you will have a pretty good understanding what's going on in our country right now. So let's get started. It's already 3 o'clock, and thank you for coming to Community CPA's 3 o'clock webinar. And today's webinar, it is all about payroll tax relief, whether it's credits or deferrals. And let's begin. I will share my PowerPoint with you so you can see what I'm about to talk to you. So what you see right now is our website, and you can always get a hold of our webinars on here. Did you see that? It's at 3 o'clock, so we list our webinars a week ahead, so you always know what is coming up. Sometimes we do change our webinars last minute, just depends on what's urgent. We, in fact, get a lot of calls related to payroll taxes because people heard something about payroll taxes. It's here and there, everywhere. It's very confusing. So what we did is we summarized those questions and we put out the webinar. And these webinars also will be posted to our channel at YouTube. So if you go to YouTube and go to search for Community CPA, you can subscribe and like and give us thumbs up and really share with your friend. So we have these webinars recorded. So whatever we did before, and you will see them. So I did different webinars lately, and I also put out small ones, like, for example, like this 5 minutes one, I am just talking about vote by absentee ballot. Is not my expertise to be a politician, but I'm so worried about coronavirus will stop people from voting. So I actually just put a 5 minutes video so people can go to vote. And then, we talk about this summary of COVID related payroll tax credit deferrals is also another short one I do. And just kind of give a quick tip of what is going on. But today's webinar here, I will spend 30 minutes to really explain what we know, and then you can take that, you can take what I said and see whether that would apply to your company. And so let's go. And that's our topic for today. And I always introduce myself, and I look at the list of attendees. You really all know me pretty well. So I am going to just pass this portion. But if you haven't really ordered my book yet, but you attended August 14, yes, the one that we just finished, and email to Catherine, CATHERIN at Community CPA, have her give you send you a book, because we have sponsors who would like to have attendees receive appointment with Ying this book. So we use that money to purchase it online, deliver it directly to your home. And the no responsibility disclaimer, I have to do that, right? You know the reason, and you also have a business. And here is the list of things related to payroll. And I want you to kind of just look at this briefly. This is FFCRA, an acronym for Families First Coronavirus Response Act. This is done by DOL, Department of Labor. Okay, so they put out two. And the CARES Act, Treasury. Okay, Treasury had two. And the executive order, this is our President Trump, he put out one. So these 5 are the only related payroll related and relief that we have in our pocket right now. Okay, so let's go to the first one. The first one is the emergency sick leave payroll tax credit. So basically, keep in mind, if you have a fewer employee than 500, you qualify. Otherwise, you don't qualify for this tax credit. What does tax credit mean? Tax credit means if you pay taxes, you get the credit back. But if you didn't pay taxes, tax credit doesn't give you anything. So you must pay the payroll tax in order to get that credit. Does that make sense? So now, and what's the spirit of it? It says that pay employee who request up to 80 hours of leave. 80 hours is like 2 weeks, 5 days a week, right? So 2 weeks of off for coronavirus related self-care or care of others. Okay, folks. So if I am a mom, I have a kid who is sick, or maybe my sister is sick, okay? She's not sick, but I'm just making assumption. And COVID related, I need to stay home, care for her. And I request my employer say, hey, I'm taking 2 weeks off and still pay my salary, please. Because, you know, there is an emergency sick leave payroll tax credit stuff and you can get the money back. So I'm being the smart A, right? Telling employer that what to do, but that's not wrong. That is what it is, okay? So what happened is, let's say the credit limit to lesser of 2/3 of employees' regular pay or daily rate of 200 for 10 weeks, okay? I don't know, my screen keeps on shutting down, but I hope it's not affecting you. And so I think I need to keep on clicking for whatever reason. So now this is emergency sick leave. So if you got paid a lot, of course, 2/3 of the employee regular pay, that would be covered. So let's say that's a $3,000. That $3,000 will go back to the payroll taxes. You will retrieve that payroll taxes back. That's what that means. Okay. Number one. Number two, emergency family mat leave payroll tax credit. Employer has fewer than 500 employees. Again, that's a qualifier. You must have a less than 500 employee. If you qualify for that, and your employee requests up to 12 weeks. 12 weeks is how many months? 12 weeks is 3 months. We were talking about 2 weeks, okay? That's a sick leave. But this is a family medical leave. So that's 12 weeks to care for children under age 18 whose school or care provider is unavailable during the COVID-19 time. And the credit limit to lesser of 2/3 of employees' regular pay or day rate of 200 for 10 weeks, okay? So this is just to say that 2/3 of your pay, and you know, so for 3 months, you can stay home, get 2/3 of your pay, and your employer will pay, and then the employer will take that money they pay you and go to get their payroll taxes credit back, okay? So that's the number two. Number three and number four are CARES Act related, remember? So this CARES payroll tax deferral, see, that's a deferral. Deferral means that it is not really free. You're not going to get money back, but you will pay later. And this particular one, what it does is, when you starting from March 27 all the way to December, if you have a 941 taxes, you know how you fill up 941, there is a line for Social Security payment, 6.2%. That employer portion of Social Security beginning on March 27, ending December, that you don't have to pay. You can defer that. And it doesn't matter the size of the employer. It doesn't matter you have sick employees or not. It doesn't matter. It is something you can do. You defer that. You defer that to 50% paid on December 31st, 2021. And the other 50% paid on December 31st, 2022. Okay. So if you have more than 10 employees and you are not taking this advantage because your payroll processor tell you that, oh, well, we don't know what to do yet, and we don't want to tell you you can do it. And if that is the attitude of the payroll processor, you really need to find a local payroll processor, a local CPA firm, a CPA firm like Community CPA to do your payroll, because it needs to be customized. This one, a lot of payroll processor company, because they are doing the volume, the way they design their system is so hard for them to really care one account. They have to change the whole system before they can do it. So, there goes. COVID may be bad for that reason for processors, but it's really good for firm like Community CPA. We're picking up payroll clients left and right because the payroll processor couldn't do it, okay? So that is the payroll tax deferral. And then you also have the CARES Act. The CARES Act, the number 4. Okay, technical issue. Don't do that to me. Okay. The CARES Act number 4, not number 3 I just talked about, that was the payroll deferral, right? And so the number 4 is employee retention tax credit. This one is really interesting. I will tell you that the qualifier on this one is that you did not receive PPP. If you received payroll protection program money, you don't qualify for that. You can skip what I am talking about. But what if you didn't? Let me tell you what kind of business did not get PPP. If you are a business just started in January, and then you don't have a history of 2019, and very likely you didn't have PPP because you have a hard time to prove what your payroll was, so you didn't get it. Or people who just really don't want to go through the trouble and the social media pressure, they just didn't get PPP. The people who actually returned the PPP money because they are not suffering economic loss. The people who are not suffering economic loss and they fear for that, so they didn't get PPP. Whoever didn't get PPP, and here is a way to look at the employee retention payroll tax credit. So let's see, there is a qualifier. You don't get PPP, and they want you to prove that, and you have some sort of loss for COVID. But the first one, operations fully or partially suspended due to COVID-19 related to government order that limit the travel, the meeting, and all that. So you see that? The number 1 qualifier is that there is an executive order, or you are travel agencies, you just don't have anything anymore. Or you're a restaurant, to keep the social distancing, you have to eliminating your seat up to 50%. So all of that, it is a qualifier. See, there is an or right here, right? Or gross receipts for 2020 quarter declining more than 50%. Than the compared same quarter in 2019. So this again reference to the businesses that already operating in 2019. But what if you didn't operate in 2019 and you just know that you set the 100 tables in the restaurant in the beginning of the year. Now with COVID-19, you can only put in 50 tables. And that reduces your income by 50% at least. And then that, well, I say that, I say reduces your income. Probably I shouldn't say that, because even if your income wasn't reduced because you raised your price and you did so well on the delivery, but my key point is that you have your operation fully or partially suspended due to the limit commerce and all of these orders. So if you have that, and you can do retention credit. So what is retention credit? Retention credit means that you can calculate the gross payroll you paid to your employee and use that amount total amount to reduce your 941 taxes. So if you pay $100,000 a quarter on 941, you have literally that much and more to take back because they give you that credit. It is a payroll tax credit, folks. So remember, it's cash back to you. The form you need to fill up is 7,200. It's a new form just for that. And it does have a limit saying that maximum credit is 5,000 per employee. And so they're just saying that you cannot have all the employee getting so much because you're going to get your tax credit back. So they're limiting the calculation. Those are all finer details. You don't even need to care right now. I just want you to hear me that is an option for you getting money back. Every time you see payroll tax credit, in your mind, you should know that those are the 941, 940 taxes I paid, that I can get the cash back. That's all I want you to know, okay? So we talked about number 4. Let's see what is the, this is still related to the number 4, the retention tax credit, and it is my other ways to explaining it. And then here, the number 5 is executive order that Trump just put out on August 8th. What did he say on there? He is doing something for employees, not employer. But what he wants to do for employees, it is going to cause the employer arms and legs to implement. Let me explain to you what he is doing. He said, starting from September 1st to December 31st, and employees can ask for to not pay Social Security taxes on their paycheck. But it is not a credit. It is a deferral, which means the employee will pay it back later. But for right now, and they don't have to pay. So here, if I read it, it says, which would be the deferral, which would be in effect between September to December 2020, would allow employers to refrain from withholding Social Security tax from employee paycheck. You know how the employers would withhold the taxes on Social Security? Don't do that. Employee earning about $100,000 or less per year would see an increase to each paycheck during deferred period. So let's calculate that earning. Let's calculate that increase. That's 6.2%. So if your salary is $10,000 in that month, and you don't have to pay $602, and it is not like you don't have to pay. You don't have to pay right now, but you'll pay later. And typically, employee and employer each pay half of the total, which is 12.4. So now, remember the employer already have a payroll tax deferral, like, I was talking on the number 3, remember? So now this is the pair. So this is a whole 12.4% is being deferred. So I'm pretty sure the deferral schedule would be just like the employers. So that way, half of it in December 2021, half of it in December 2022. But this is the newest one. I'll tell you that all the accounting tax professionals are going crazy right now because we don't know how to do this thing without a huge system change. But executive order is an order. Executive order says it is need to happen. It will happen. And it's just up to the employer to figure out how to control the mess so we don't end up with the employee. So what happened if the employee left the employer after this year? So who is going to make sure that that taxes is there? So that means I need to, whoever quit, I need to just calculate and ask for the money to keep in my bank account. But what about I file bankruptcy? So is that employee going to end up paying it twice, right? So it's really, it is not as simple as the desires, but we understand the desires. So this is pretty much today's topic. And if I quickly go back to my original slide, you will see, remember, this is the 5 items that related to payroll. And number 1 is emergency sick leave by DOL, and an emergency family medical leave by DOL, Treasury for CARES Act, and Treasury for CARES Act on retention and the payroll tax deferral. Then you have the executive order that is not from any, any government entities, is the executive branch and the executive order coming to for us. So now I am going to take a look to see whether we have any questions and the chat and the people would like to ask questions. Otherwise, you keep in mind, you can email Catherine@communitycpa.com to have her send you the appointment with Ying book. And that book is actually really easy reading, and you can tell that I don't speak big words, and I'm very simple in English. So my book is that way as well. It is very understandable. But that whole book, it is not something that I pull out of internet or the college textbook to teach you how to start business. It is really a experience accumulation from all the appointments I have, all the clients I meet. So I will tell you why they're successful, how they start up their business. So it would give you a lot of ideas and making you understand yourself, whether you are a heart person or head person or a hand person in terms of starting up a business, because there's a huge science behind it, because it depends on your personality and your starting point is very different, and what you will be short is very different. So learning yourself is the best way to do your business well. And I hope this gives you enough to digest for today. And you can look into our YouTube again to look to see what we have on our YouTube for the uploaded video. I hope you subscribe to our channel, and I really like to see our channel becoming more of a communication hub for our clients, our friends. So I hope to see you there, and thank you for attending this afternoon's webinar.